So, how would you have liked to have bought Tesla at 120, Google at 88, Palantir at 6, and many other great stocks at ridiculous prices? The good news is, you didn't need any fancy charts or graphs or anything crazy like that to do that. I mean, there's no genius necessary or anything else like that. You just need to understand a few very simple concepts that we will discuss today. I just ask in exchange that you gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. And yes, the Father's Day flash sale is live where you get to see buy alerts like Tesla at 104, Google at 83, Palantir's in the 6s all day long, and Meta at 90. And you get my watch list complete with price targets. We got tons of exclusive videos. We do a live Q&A every week at a minimum. You can slide into my DMs. There's so much there, guys. We got a stock analyzer tool coming that's going to be completely free for members as well. So make sure you check out the pinned comment down there and take advantage of the flash sale before that ends. All right, so I wanted to do something a little bit different than my normal videos. So instead of giving you guys the concepts in kind of, like a bullet point fashion and then discussing each one and then making predictions so you really don't know if the concepts actually work or not because they haven't actually happened yet, I'll just show you proof that it actually works, what the stocks were, what the market predictions were, and more importantly, what the concepts are in detail so you can see exactly what the results are and how we got there. This was released on January 4th to my group, and it kind of lays out the concepts beautifully for why we hit all those stocks at those prices, or in some cases even lower, and a bunch of other stocks a lot of other folks hit that were lower. And we kind of saw where the overall market was headed, despite all the doom and gloom and all the other craziness and all the other noise that was out there back in January, if you kind of think back to that time frame. Don't worry, guys, this isn't hard. There's no magic, there's no charts. It's just easy to understand truths about investing that I felt would be helpful to you all as well in your journey, because there's always stocks that the market completely ignores. There's great stocks always on a massive discount somewhere, and this will help you identify them and have the confidence to just pounce. What is going on, guys? And hopefully everybody's having a great start to the new year. And I honestly wanted to talk about the stock market and kind of what everybody kind of sees and what's talking about for 2023, and actually talk about what the stock market looks like coming into 2023 here as kind of we move forward, and kind of let you kind of think about this from a little bit of a different perspective. I've seen a lot of different videos, a lot of CNBC stuff, all the other things out there about this next upcoming year. And it seems like everybody's kind of missing this concept altogether in terms of risk to the stock market. And we'll talk about Tesla deliveries, Tesla earnings, all that good stuff here in just a second. But I felt like to kind of start our year off here, I really needed to address what the heck is going on with the market, what expectations are, and kind of how the market actually shapes up kind of for the year per se. And again, kind of take it a little bit of a different angle, a little bit of a different look at it, because it seems like nobody wants to touch on this. Probably because nobody would click on it. It's probably the real reason why. But, hey, it is what it is, guys. This is the honest truth, and this is what's actually going on here. So when I look at the stock market this year, coming into this year, the stock market is a lot less risky than it was last year coming into basically the beginning of 2022. Remember, coming into 2022, we were coming off those all-time highs, and to me, the market was overvalued. Most of the stocks were overvalued, and that's a very risky proposition. And now coming into 2023, we're kind of in the exact, we had a very, very nice, basically a crash, a big crash in a lot of different stocks, kind of depending upon which ones you look at, coming into 2023. So to me, and honestly, that means a lot of the risk has been taken out of the stock market. Now, it doesn't mean all the risk is out. It doesn't mean that we can't go lower or anything else like that. But the chances of going lower this year are a lot less than they were last year coming into the year. So those are kind of some things you want to keep top of mind. I know there's a lot of doom and gloom out there. There's a lot of recession talk, which is coming, of course. We got the interest rates that have come up and a lot of things like that. But then kind of when you look at estimates for the year, and when you kind of think of, all right, where are we at right now? Where are we going to be at the end of the year next year, basically coming into 2024? Are we going to be worse or better than we are right now? Or basically, I guess it's possible you could be break even too at that stage. If I had to guess, and I'm just guessing here, guys, I would say we would be break even to a little bit up by the end of the year. And obviously that's going to be a different mix, right? I'm going to see some of my stocks like my Apple's probably going to suffer the whole year. It really sucks, which means that's going to drag down my portfolio overall. Although it booted my portfolio last year and it made my portfolio, crazy positive the year before. That's kind of something you got to learn to live with stocks like that. Some of those old man style stocks. While some of my other stocks that were just beaten to death this year, I think are going to do very well. Your Metas, your Googles. Hopefully some of the, the unprofitable plays start to turn around second half of the year or so and really provide a nice positive return on that end in the back end of the year or so for my portfolio. So to me, when I'm looking at the stock market overall, a lot of the risk has been taken out, which of course means two things, right? That means the stock market is less risky now than it was last year this time. I don't think anybody will debate that. It is far less risky this year than it was last year. Doesn't mean there's no risk. Just means that it's less risky. And then on the flip side of that, that also means that your returns will also be greater on the other side of this, basically meaning because the prices are lower now, stocks that you buy now are going to be, obviously have a greater chance of a higher return than they would next year. Let's use Tesla as an example since we're going to talk about them in just a second. Tesla last year coming into the end of the year was at what, 350, 380 coming off that 400 price target? Is that less risky than buying Tesla now at 120 or so, or whatever the heck it's at today? Sorry, I should have looked before I started the video, but I didn't. I'm sorry, I should have looked. I just knew it was green. But is Tesla at 120 less risky or more risky than Tesla at 350, 385, 400, whatever the heck it was at the end of the year last year, 300, doesn't matter. The point is, obviously at the higher price point, it is riskier than it is at the lower price point unless something fundamentally changed. But I think most of us agree nothing has fundamentally changed with Tesla at all. Sure, you're going to see a slowdown. Sure, there may be other things that slow down with Tesla stock itself, but that doesn't mean it's more risky than it was last year at the 350 or whatever the heck the price was last year. It was more risky then than it is now. So a lot of the risk has been taken out of the stock. And plus, if you bought it at 350 and, basically I'm buying it now at 120, 125, whatever the heck the price is, which one's, the riskier play per se? Which one on that, on one side? And then on the flip side, which one is going to provide you with the greater return, right? So if Tesla goes to 300 again, well, you're basically break even or still down on one. And the other one, you more than double and you're approaching a 3x. Let's just say it gets up to 360. Now you're positive on both, but one of them you tripled and the other one you didn't there. That's why I preach valuation so much, because a lot of times stocks can get, kind of disconnected from the fundamentals and get extremely overvalued like it was last year when everybody was telling you to pile into that sucker. And now that it's down and it's extremely undervalued, in my opinion, everybody's telling you to run away from it because God knows which price is coming next and who's going to predict what for the price next. I don't know. All I know is one was far riskier than the other one, and it might very well drop lower. And I'll continue to dollar cost average down as it continues to do that, if it does that. That's why I do the modified DCA that we talk about all the time. It's not a pure DCA where you just buy the highs, you buy the lows, and that's a great strategy. Don't get me wrong. It's not a bad strategy at all. It's a great strategy. It's just one to where I can kind of been doing this long enough to where I kind of understand at times stocks can get extremely overvalued. Now, it doesn't mean I get the entry point right. It doesn't mean that I hit the bottom or anything else like that. It just means I wait till it gets down to fair value or below value, which stocks always return to that number. And then I start my DCA from there and DCA heavier as it goes down. And then as it creeps up, again, DCA until I think it kind of gets a little bit overheated. And then I back off and I DCA into other stocks. You saw it with my buy alerts last year. I didn't buy Tesla for felt like almost a year. I don't remember. I did the math one time. It was almost a year. It may have been more than a year. I don't really remember, so don't quote me there, guys. But it was almost a year, or so that I didn't buy Tesla at all. And then virtually every buy I made at the end of December was freaking Tesla because it's just, oh my gosh, did you guys see the price? We all saw what happened to Tesla at the end of December and coming into the new year here. If you want to give me a discount, I'm happy to take it on great stocks. It's just basically, hey, your favorite, I don't know, shoes or whatever the heck goes on sale, 75% off. It's really hard not to buy another pair, right? Just kind of the way that it works. And then whenever it's red hot and they're marking prices up, double of what retail price would be, you're probably not buying them unless you just really, really need them for a reason, right? You're probably kind of holding back. And I just kind of view stocks the same way. It was an old Warren Buffett quote a long time ago. The stock market's the only place where, you get a sale of 50% off and nobody buys. But, at the stores, they have a sale of 50% off and everybody's in there buying. And it seems like everybody treats the stock market the same way, not just us retail investors, large investors and small investors too. So kind of when we're talking about risk with the market right now and risk with stocks, we are coming into a much less risky environment than we were last year with stocks, despite the fact the narrative is the exact opposite. Last year, it wasn't all that risky. Everybody's, all in, blah, 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 blah. And this year, it's the exact opposite. Fear, doom and gloom. We got a lot further to fall, 50% to go, 80% to go, whatever the case is with a lot of different stocks. And I'm just telling you from a risk-reward perspective, the risk is lower and the reward, potential reward, is actually higher this year than it was last year. Doesn't mean it can't get worse. Doesn't mean next year may even be a better opportunity. That's just kind of where we are at this stage. I don't know where we're going at, at the end of the year next year. Be great, but if I'm guessing, we're basically break even, and I'm talking the indexes here, not necessarily my individual stocks, or we're a little bit up for the year. So, again, the other reason why I think that is 81% of the time when the stock market has a down year, and a big down year like that, the stock market has a positive year the next year. So again, that's 81% of the time. And I'm sorry, this isn't the financial crisis or something like that. I do think it's kind of a rolling recession. We talked about that. And there's a few other things that may drag this thing out a little bit longer. But I don't think there's just a catastrophic event, at least we have not seen it yet, that's going to create another massive leg down to where we could see a potential negative year next year so far. Again, doesn't mean it can't happen, doesn't mean there's something lurking out there that we don't see yet, but as of right now, a lot of these things are not lining up for that, assuming inflation continues to come down and the Fed doesn't screw it up. And I know those are two big assumptions there, so don't quote me on that sort of stuff, but that's kind of where my head is for the next year and kind of how I want you to understand risk reward coming into this year, despite the narrative and everything else that goes on and everybody's feelings about everything else. That is the actual truth with the risk reward of the market this year versus last year. And don't forget, if you want to see all my buy and sell alerts in real time, you want to see my watch list with price targets, you want to take 5 courses for free. We got tons of exclusive videos in there, guys. The best Discord of 6 and 7 figure investors out there. We got that stock analyzer tool that's coming. It's going to be free for you if you're a member. Just make sure you don't miss the sale for the group where the prices are on sale. And honestly, once the stock analyzer tool gets up and rolling, I'm going to have to raise the price, guys. So it's definitely coming. So take advantage of it right now. You get to keep your price for life. Not going to raise on you no matter what happens in the future. You get your price for as long as you stay a member. So check out the pinned comment down there and see if it's right for you. And click here if you want to see the 3 stocks that I'm currently buying right now. And click here to see exactly what my plan is for this market. So thanks for watching, and we'll see you in the next one.